Hello everyone, welcome back. This is Luke Staden from Black Tower Financial Management. Today we're going to be diving into the world of currencies with our special guest, Brian Bernal from Currencies Direct. Hi Brian.
Hi Luke, how you doing?
I'm doing great, how are you?
Doing good. Very pleased to be with you. Thank you.
So Brian, can you tell us a little bit about yourself, the company you represent, and your role, I suppose, in the FX markets?
Yeah, of course. So just a bit about myself. I've been in the foreign exchange space, the payment space for almost approaching 12 years now. My entire career has been based around financial services, particularly around markets. It can be early on in my career, it was all different types of markets, from equity markets, bond markets, et cetera. And that's really transitioned into FX markets. So I've been in this space for quite some time. A bit about Currencies Direct. Currencies Direct is a foreign exchange and international payments company. Our organization was really bred out of customers that were looking for more services than what their banks were providing them for foreign exchange rates, expert guidance, payment expertise, and that's what we aim to do. So we bring transparency into the foreign exchange market. We offer all types of guidance as well as any risk management services for individuals or businesses that are needing to move funds around the globe.
Wonderful. So if I need to change some money, you're the person to speak to.
Of course, absolutely.
Well, the reason I've asked you to come on is because, honestly, currency markets have been my Achilles heel, so to speak, among, I suppose, many other Achilles heels. But FX have always struggled to fully understand the markets. So I thought I'd bring an expert in here just to talk about what's been happening in the currency world. So I suppose, what are the big movements we've been seeing over the last couple of weeks, even months, if you want to talk about them, I suppose?
Yeah, of course. So, I mean, I think we'll definitely, I can pinpoint a lot of it with the U.S. dollar. The past, I would say year and a half or so, we've seen a lot of strength out of the U.S. dollar in relation to some of its peers, to the euro, to the pound, and that seems that's just about to end, or has been at the latter stages of its rise that it has had. So some of the interesting moves have been just last month in the month of November. To give you a good example, we had pound U.S. dollar roughly at a from peak to trough, or from the lower end to the upper end, about 5.5% move just in the month of November alone. The euro 105 to 110, which is another 5% move. And you can almost input any other type of currency against the U.S. dollar, and you'll have seen similar moves of the dollar weakening and some of its peers starting to rebound. So that's been interesting the last I would say November, and kind of to where we sit right now. But yeah, go ahead.
Well, I suppose I'd like to get into what's causing the change in the US dollar now, but perhaps before we get there, do you think you could answer? You said that the US dollar, and I've definitely seen this, has been strengthening against pretty much every global currency over the last few years. Is there a particular reason why that's the case? What's caused this strength over the last few years, and then what's caused the decline in the last few months?
Yeah, very, very good question, Luke. And there are a few main reasons, and when you kind of put them all together, you get a U.S. dollar strengthening environment. First and foremost, the Federal Reserve Central Bank. A lot of this is based around central bank and their monetary policy. So you've had the U.S. dollar strengthening as rates have been rising in the U.S. And when you look at all of the other central banks, the U.S. Federal Reserve was pretty much the first one to get out of the starting gate in terms of raising rates. I mean, historically speaking, we haven't seen interest rate rises like this in the fashion and the speed that has taken place during that time period. So that's one main factor that has really bolster the dollar to some of the levels where it was recently. And coupled that with it somewhat being a safe haven currency, or at least still perceived as the safe haven currency, when you have some war drums beating, and which we've had, several. A lot of people begin to flock to the U.S. dollar just from a pure safety perspective. So a couple of those variables, those are the main two variables that have kept the dollar relatively strong.
So in essence, when federal banks or the Federal Reserve started to raise the interest rates on the outset to try and combat inflation, that meant that there would be more profit in holding US dollars because you could get better rates on bonds or holding it in US bank accounts. Just for the average person to understand why the rate increase helps the currency.
Absolutely. Yields have been starved for quite some time, and there's yield in the U.S. dollar, and it was showing, some of the early stages. They started to raise rates early, and people were looking for yield.
Makes sense.
Yeah.
So that's how we got such a strong US dollar. So why is it falling now?
Yeah, very, very good question there as well. So we're almost at a point to where we are getting market participants really believing that there are going to be some interest rate cuts coming. Here stateside, you're looking at an 80% probability in March that the Federal Reserve is going to cut interest rates. Whether that happens or not, that's that's yet to be seen. And there'll be quite a bit of jawboning, as they say, until that time comes. But a lot of market participants are beginning to position for that. Conversely, you have yield in other areas of the world also. So as some are looking for the U.S. dollar to weaken, they say, maybe another geographic area or that particular currency will be having that yield holding that yield for a longer period of time. So that's really been the crux of it. Has been basically the central bank in the United States kind of pausing on rates and perhaps hinting on cutting rates in March. But 80% is a pretty strong number in terms of market participants believing so. So you're beginning to see that being priced in at the moment.
It almost sounds, because to the layman, to someone who's not that understanding of currency markets, it might seem that having a strong currency, having a strong dollar is a good thing. But it sounds like the US dollar is being punished for getting inflation under control a little bit faster than perhaps their European or I'm from the UK, so British counterparts, and as such can go back to reducing interest rates. Is that the case?
Yeah, it can be looked at that way. I mean, a strong currency doesn't necessarily always dictate, an amazing economy. A lot of times the U.S. thrives on a weak U.S. dollar. So it also depends on, from nation to nation, whether they're an import or export nation, how they're generating their revenue, on how they actually want their currency. So I wouldn't shove everything and say strong currency means economy in that particular country is doing extremely well. But sometimes that certainly is the case. But in terms of getting inflation under control, it seems it seems that perhaps it has been under control. A lot of the data that's been coming out has suggested so. However, it still feels like it's pretty prevalent here stateside, and I'm hearing that in other areas of the world. So I think that's what these central banks are looking to tiptoe going forward, saying, have we actually combated inflation? Can we start lowering rates? I think that's what that's probably going on in their offices every single day of what position or what stance to take going forward.
Well, that's one of the nasty things about inflation. Even inflation falling, that doesn't mean prices are going to fall. It means you're stuck with the same high prices, they're just increasing slightly less. And it's a very good point about import versus export countries favouring weak or strong currencies. For example, I know that China has very strong price controls on their currency because they're an export country, and a lot of people have criticized them for artificially keeping their currency low so their exports are cheaper to the world. So a strong currency, as you say, it doesn't necessarily mean good things for the country. So what's really been interesting you in the currency markets over the last year? Is there anything that stands out?
A few things. I mean, the Japanese yen has been a very interesting pair to watch, particularly the U.S. dollar, Japanese dollar, U.S. dollar, or Japanese yen, U.S. dollar pair, and it's been I would say the past couple of years has been very fascinating to watch, and it's something that's not really covered so much, at least in the Western world, but. The Japanese central bank, I mean, the market really gave the Japanese central bank an ultimatum of, look, you can either save your currency or save your bond market. Which is it going to be? They chose to save their bond market with yield curve control, and thus you've had the yen basically looking at the threshold of 150 to the 150 to the US dollar, and that's levels that we haven't seen in quite some time. So for someone who's an extreme market participant, watches FX markets, and it's a phenomenon that has been interesting to watch and watch it unfold. From our perspective, I mean, we've had a lot of customers sending funds actually into Japan, looking to take advantage of that for various reasons, purchasing property, et cetera, over there, just because of the strength of other currencies against the yen. A lot of them are Japanese expats, et cetera, that are stateside or in the Eurozone in the UK. And they're looking at it going, well, I can't believe how cheap things are in terms of the currency with the purchasing power that they have. So that's been a fascinating thing to watch is the Japanese yen and watching the Japanese central bank try to navigate what's going on there. So as the rest of the central banks, when I say that, the European Central Bank, the UK Central Bank, and the Federal Reserve in the US have been on a rate rising sequence. Japan has not, and they basically have stayed at very, very low yields. Usually they're involved as well in kind of that instrumental move of interest rates going up and down. Their currency has suffered because of it. So it's been interesting one to watch it unfold.
Fantastic. I'm already mentally preparing a holiday to Japan because I've always wanted to go. Terrifyingly expensive. Fantastic. Yeah. I mean, obviously not fantastic for people trying to import to Japan, but fantastic for Japanese exporters, I suppose.
Yeah.
And I suppose our last question of the day is, where do you see the markets going in the future? What should people be looking out for in terms of what's going to influence the currency markets? Now, I know, of course, federal banks play a significant role, but is there anything else that comes into play, or is it truly just a central bank dominated world?
I will say it is mostly a central bank dominated world. It always hasn't been that way, but it seems we've entered that era to where it seems to be a central bank dominated world. What takes things off the table mostly are or what changes is to be kind of, to look out for. And sometimes it's kind of hard to see it, are these US dollar spikes. So events take place, if some type of war really breaks out or something along those lines, you will see the US dollar early spike, and it can really wreak havoc on other currencies, on other businesses, et cetera. It seems we're out of the woodwork in terms of bank failures. It seems that everything seems to have been backstopped. That was really one of our last large US dollar spikes, was some bank failures here stateside. So that seems to be contained. However, that's really the thing that we always try to guide through are some of these US dollar spikes where it's almost just a wrecking ball, and then rates are down, but currencies are down quite a bit. So apart from that, yes, mostly a central bank game. And like I said, it always hasn't been that way. Yes, a lot of the economic data are still factored into some of the shorter term moves, but the longer term moves and longer term trends are really dictated from central banks at this stage.
Okay. And I did say that was the last question, but I do have one more for you. Brian,
Sure.
if I'm someone who wants to convert some currencies from one currency to another, where should I go to do that?
Yeah, good question. You should definitely come to Currencies Direct. You can reach out to us directly, and we'll be able to help with that. We can make it as simple as possible for you. If you want us as a sounding board at all, want to bounce some ideas off us, definitely let us know, and we're happy to help.
Okay, there'll be a link in the description to this video if you want to get in touch with Brian or anyone else at Currencies Direct. Brian, thank you so much for coming on and doing this video with me. You've really illuminated me to the currency world, especially Japan. I was not aware, and I might see you in Tokyo sometime soon.
Okay.
Thanks for coming on. Anything you want to say before you go?
No, thank you so much. Looking forward to seeing to the end of the year and seeing what the first quarter of next year brings in terms of markets, et cetera. So it should be fun and exciting.
Wonderful. Well, we'll do this again sometime in the future and have another catch up on what's going on in the currency markets. Take care.
Perfect. Thanks. Cheers. Bye.
Bye.